Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 10th of March, 2020. This is episode number 1709. A reminder that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. The market sentiment this morning is quite bullish. In case you have not seen or heard, the S&P went limit up on 5%. On the Globex session at 28.79, even the high overnight. We'll look at that in a little bit. Not very much to discuss there. So there's some euphoria. It's being said that this is the result of the action anticipated by the U.S. government, as well as the coordinated action that's being spoken of in Europe, Japan, and others. Um, the investors are seeing bargain basement prices, and they're picking up whatever they can. The S&P on its lows was really trading middle of uh, December 2018 prices. We didn't really lose all that much if you look at the bigger picture, but the speed and furiosity of which it was done, of course, is very difficult, and of course, it's a difficult trade with, currently a requirement of 19 and a half point stops in the S&P, 19 and a half points, 1 minute rotations moving around very, very rapidly. In fact, my volume scope chart almost always looks like a pretty little landscape versus bars with numbers as the chart range gets crunched down because the range is very wide. Anyway, the winner today, of course, is Crude. Crude took a pop at $2.56, trading at 33.69, 8.22% up. Crude trading April futures. Crude is mainly due to an open a door that's being cracked open by the Russians, in that they're saying that they're willing to come back to an OPEC plus meeting to discuss the supply situation. And I think Saudi Arabia is pumping 12.9 million barrels per day. In fact, it's not just pumping; it's pulling those out of reserves to cover to make up for the loss in price. Russia increased its production and is meeting with its oil companies, or has met with its oil companies today, and they're increasing production by 300,000 to 500,000 barrels per day, which really is nothing, is dwarfed by what Saudi Arabia can do. It seems like it's a price war on crude that Russia would have a very, very hard time doing well in. So that's where that stands. The Nasdaq's up 276 points, 3.47%. The S&P up 90 points, 3.28%. The Dow's up almost 800 points, 3.23%. The Russell's up 40 points, 3%. The Euro Stoxx up 1.45, and the Nasdaq the DAX is up 1.37. The European markets are not recovering very well here. The loser today is the yen, off 2% against the dollar, and the bonds are down 2 handles and 23 ticks. The 10 years are down 1 handle and 10 and a half ticks, or 12 ticks now. The Eurobond's down 162 ticks on the session, with gold being down $11.90. So that's where we stand. Risk on today. We're opening in or around yesterday's range in the S&P. Let's move on to what is expected for today. Things are calming down a little bit. We did get the Eurozone GDP growth rate, came in at 1% year on year, which beat the 0.9 expected. Q on Q came in at 0.1% in line. The president of the U.S. is expected to give a speech at 4:30 today. Very important to listen in just to see what this government has in store in terms of managing the situation. And then this evening, the Australians have Westpac Consumer Confidence coming out at 6:30 Eastern. So pay attention to 3:30 Central, 4:30 Eastern. And then if you're trading currencies, of course, pay attention to the 6:30 Eastern release for Australia. Let's move to let's move on to what we expected yesterday. This is we're going to keep the segment very short. Yesterday we were lock limit down at 28.19. I talked about the expectation that once the cash opens at 8:30 Central, 9:30 Eastern, expecting the market to burst down to the next limit, 7%. There's a lot of pent up energy there. I think there was like 17,000 on the offer. And so the market releases, hits its limit, and then I expected a bounce back up and a consolidation in the 28, around the 28.19 to 23 area, something like that. I expected it to bounce back up and hold steady. Here's what actually happened. It's very hard to predict what this market is likely to do. Here's what actually happened. Actually, we can't even see that on a 6-tick Renko. So let's go to the 15-minute. Here it is. The market reopens. We were lock limit at 28.19 right here. The market reopens and it immediately reprices to 27.62. We go down to 27.15 and then we bounce back up to 36.75. And then this is where I left it. I expected the market to kind of hang here in the 28.20, 28.19 area. I expected the market down back up to the 5% limit. And I ended up selling off. And this sell off actually gave a lot of signals there. Convergent members saw me cautioning longs on the turn from above the IB high here on this turn down. We never went neutral on the day. We never took out the low, but it was looking pretty bad for longs all afternoon, holding VWAP and mid within about 7 or 8 points before continuing lower. So this is a classic impulse pullback continuation type of structure that I often talk about. This here is the mid of this swing right here. So that's yesterday. Notice that a lot of buying delta there. Of course, the delta is tricky because of the lack of liquidity, but it still shows intent. And then the volume was quite in line with the 20-day mean. The 20-day mean for any given bar is the black line, and then the actual is the white or orange line. And you can see they're pretty much, other than the push up on the reopen after the lock limit, which occurred I think at 9:49 Eastern. Other than that, the volume was pretty much in line. Take that, carry that forward to the overnight session. The overnight session opens up and finishes the move lower. Let me crunch this down a little bit. Finishes the move lower, probes the 2700, gets to 95.25, and then from there it's just buyers, 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 buyers. And so what we end up with is a profile that has most of its volume near the top, and the expectation is it's likely to hold and continue higher today. Today is a bouncing day. So that's where that stands. While we're here, I want to take a moment to look at the bigger picture, because we often as day traders get trapped in the minutia. So I'm going to just zoom out a little bit and look at where we are. So overall, what has happened is we've had this quick correction. The way this is shaped is impulse, pullback, pulled back to the mid of the entire run down. It poked through the mid, really on the Fed announcement, the 50 basis point cut last week, the surprise. It went to 37, mid was 23 and a half. These are RTH only bars, day session only bars. And then we have a continuation leg down and really pushed through. So we see the same structure that I show on the Renko bars. Um, we see that same structure on, the daily, the 15-minute, whatever, because the market operates in fractals, in my opinion. So what we have here is an impulse mid pullback continuation, and now it's kind of exhausted and it's likely to continue to correct upwards. Yesterday, we hit a very significant area here. This is, I believe it's 2747 is a big high volume node from way back in 2018. This area was expected to cause some turbulence and hold the auction in place, and it actually did yesterday. And it's trading above there. It's important that it's keeping this reference beneath us, and is pushing up. And this is why the expectation is on the removal of the lock limit up. The market is likely to retrace higher. The market has not. I don't recall, and I tried to go back and look, and it's really hard to recreate. But the market generally doesn't go lock limit down and then recover the next day. Generally, there's some more selling. There's a further lower low before it continues, before it makes its correction. It doesn't mean that it's today. Today, I believe, is a relief rally day, uh, and so it's likely to push higher, fill the gap, and come into this balance area back here over the next couple of days. So expecting it above 3,000 here in the next couple of days. We'll see how that goes. This is not a trade recommendation, but that's the big picture here. Other than that, let's take a look at Bookmap. But before we do, we're going to have this good looking guy on for Convergent Trader Spotlight. And this is kind of a short notice event, and I wanted to let everybody know about it. You can go and register at go to ct.pro. Type that in here, go to ct.pro, Townsend. What we're going to do is have Eric Townsend of Macro Voices. Eric's been very, very vocal about the coronavirus since the beginning of January, and we're going to have him on tomorrow at 4:30 Eastern. You'll see an announcement on my Twitter feed and all over the place. And if you're on any of the lists, we'll hit you up. Hopefully, it doesn't end up in spam. But I thought it was very important to have him on and just in an interview to educate us about really what's going on with this coronavirus, COVID-19, and to tell us what the market is expecting. Now, on Twitter, Eric and I had a back and forth on the prices of crude oil, and I had technically on my charts, I believe I spotted the low at 42, and he's like, you're going to see this in the lower 30s. And here we are. So I want to pick his brain a little bit about crude. Eric runs a fund, and runs just what I think is the best global macro podcast out there called Macro Voices. So we're going to have him on at 4:30 tomorrow. Please sign up. Please show up. There will be about 10 or 15 minutes of questions at the end. He doesn't often do live events. He's a podcast guy, but we're going to have him on live. So please show up and ask questions. It's important to know what the big picture is. Here's a CT Bookmap for us to take a look at the overall picture. Here's what's happened overnight. There was quite a bit of lifting in this area right here. Just a huge amount of lifting going on. But what we ended up doing is we ended up pushing into these offers. You could see the offers, folks. smart folks out there um, are offering out the limit or a tick below the limit at 28.79 even, 28.79 even. I did post the limits for today, the price limits for today on my Twitter feed. Again, you can find that at twitter.com/futures trader 71. I posted these for today. The reference price is 27.42 from yesterday. Lock limit up is 28.79, but that's only in the Globex session. There's no lock limit up in the day session. Lock limit down is 26.05. So we hit lock limit up in Globex and just a big amount of offers traded. It traded up to that price, traded a little bit, and has come off since. And it's a pretty deep pullback here of about 60 points or so. And once the day session starts, the pit session starts, or RTH starts, that limit is expanded. The up limit is no longer in play, and the down limit becomes 25.50, just in case something comes out causing this market to sell off. But the delta is pretty strong overnight. The market's lifting pretty good. You can see a lot more green delta than red delta, and there isn't anything to glean yet again off of the order flow because it is such a highly volatile market. I do expect the VIX to collapse a little bit today, expecting it to compress. I believe that long VIX traders are likely to be exiting today. You can see the next big offer up there is at 2,900. And then beneath us, there isn't all that much all the way down to 2802, 2802 underneath. So that's where we stand. The liquidity that's been resting for a while really is at 2,900. So what are we going to do next? We're going to look at what's expected for today. The market's calmed down enough for me to be able to do this. Again, these are not trade recommendations. These are just how I see the trade playing out. It doesn't mean that this is what the market has to do. The expectation this morning is an open auction just slightly out of range or in range. I'm expecting the market to be responsive all the way down to the 2802, 2803 area, expecting it to consolidate, poke through 2800, and then I'm looking for a push into the afternoon that brings us to the gap zone mid. The gap zone mid at about 2866 or so. That's what I'm looking for on the primary scenario. I am looking for the market to respond to the fact that it has popped a lot higher. It's expected to move higher after pulling back. If it does not pull back, then it's likely to close the gap above. It's likely to rush up. The secondary scenario is an open test down, drive up, consolidate at the gap zone mid, and then push this 79 and start to move towards the 2898 and 2900 area before it consolidates into the close. And then, of course, the third scenario, the big drive, is likely to be an open test drive lower, consolidate, push, consolidate, and then back towards the MC, this composite point of control. And if it cannot hold here, then it might spill even further. 2715 is likely to go. But yesterday's close was quite weak. I'm happy for any of these to work. There's plenty of volatility in here, of course, as always. Only trade at full margin, please. Please trade at full margin. That means you need about $7,000 per ES. I'll tell you what the full margins are, in fact, just in case you don't know what that is. The full margins for the most popular products. Let's start with crude. The full margin on crude is 38.50. That is very, very likely to get adjusted up today. 38.50 $3,850 per contract. If you do not have that, please don't trade crude. On the ES, current margin is $8,360 per contract. If you do not have that much, don't trade the ES. On the NQ, it's $9,900. On the Dow, it's $7,480. The DAX is running a sweet 23,975 euros per contract. And then the micros, of course, are about a tenth of that. If you don't have $760 per micro, don't trade it. If you don't have $990 per micro NASDAQ, don't trade it. And in the Dow, 748, and the Russell, 412. So if you don't have those, do not trade them. The mini DAX is at 4,795 euros per mini DAX. And then the other product that's popular is the Euro stocks is 2,642 euros per contract. Please don't trade unless you have a full margin per contract. Okay, you can find margins on the CME site and many different broker sites. Good luck today. Again, please sign up for the discussion tomorrow. This is kind of an impromptu spotlight, short notice spotlight. We arranged it yesterday. He was kind enough to come on. I'm very, very thankful to have him. Tomorrow at 4:30 Eastern, the link right there is go to ct.pro, go the number 2, ct.pro/Townsend with a capital T. We'll have him on for about a half hour. He'll talk about COVID, he'll talk about oil, he'll talk about the markets in general, and then we will take questions for about 10 or 15 minutes. That's for tomorrow after the close. Good luck today, and I'll catch you tomorrow morning. Take care.